What's really nice about this panel is to get the person who makes products, so your Oreo cookies, your Ritz crackers, and then the person who sells them in their stores. And I also want to, sort of bring you together because you have a lot of points in common. You both had your CEO positions for about a year, even though, yes, you have bounds of experience. You both are European. So, Frans, you're Dutch, you're from Belgium. You both recently, sort of showcased your vision, your strategic visions for both of your companies. And you also have this shared challenge, like many industries, of creating a digital path at a time when Amazon is eating everyone's lunch. And as you can see from this chart, go back. You can see from this chart that, the way the market is favoring consumer staples, of which the retail is one, isn't necessarily how they're favoring other industries. So on that note, Frans, you have projected that your growth in European e-commerce is going to grow 30% this year. And you're projecting that the US growth will be 30% over 3 years. So what's going to be the catalyst, whether it's a tech event or other, that will propel your US shopper to buy more groceries online?
I think the two things here. First of all, customers would like to buy groceries with a trusted brand. And with all our brands, with Food Lion and Hannaford and Giant, we have those trusted brands. And the second thing is more and more customers would like to have an omni-channel proposition. So both buying groceries in stores, but also having the online. And we have a long history with online already in the US. We have $1 billion sales in the US in online only, and that is food. So that is chilled and frozen and fresh food. And I think those two elements in being a trustworthy company with a lot of transparency in the food chain, being a company which has heritage and experience in omni-channel proposition, and having a great assortment. And that's not only the Oreo cookies, which are great, but also our 40% of fresh food and all the other assortments we carry.
Okay, but at the same time, so Mondelez, you're projecting growing your digital online sales to $1 billion by 2020. I have to ask you, Frans, does it make you nervous that a food developer like Mondelez is basically attracting its digital footprint, building a digital footprint that might take away from your stores?
The good news here is that in the end, the customer decides. And we see an online growth in our business. You mentioned 20% next year in the US, 30% the year after. So we also grow quite fast there. And in the end, we look at this total wallet, which we are going to sell. And that is the most important thing. So we don't look siloed in online and offline, siloed in online and the stores, but we look as a total wallet. And of course, it's a free world at the same time. And a lot of formats got blurred. If it's discount or supermarkets, it's online. And let's see how people do. Let's see how successful Amazon will be with fresh, or how CPG companies are successful in online groceries. And I think the jury's out, and it's an open market. It's competitive.
Well, and from our perspective, when we say we will reach $1 billion, that is what we call e-commerce. But most of that is done through online retail from our brick and mortar retailers, or through the pure play players like an Amazon, for instance. So.
I want to ask you a little bit. Your 85% of your products are snacks. So again, the crackers, the Cadbury chocolates, Milka bars. How do you strategize having that kind of product offering at a time when consumers are increasingly turning away from mass-produced goods and sugar?
We just launched a new strategy called Snacking Made Right. And the made right, snacking stands for the fact that we're a snacking company, but the made right refers to a number of things. And in the first place, it refers to the fact that consumers want an assortment of products. The same consumer at a certain moment might take a very indulgent product, and in the same day at another moment might take a very healthy product. And so we offer an assortment of products. We, for instance, also do Belvita, which is a breakfast product, or we have Enjoy Life, which is free of all allergens. So we offer a wide array of products which are the whole spectrum from health and wellness.
And how do you see that shift, that balance in your portfolio moving from sort of the mass-produced to the health category?
At the moment, what we see is in percentage growth, the healthy part is growing faster. In dollars growth, it's still the more indulgent part that is taking the bigger chunk of the dollar growth.
Okay.
So, and if we look at snack markets around the world, it is going to still be the chocolate, the biscuits, the ice creams, the salted snacks that are going to be the biggest
What
dollar
rates of
growth.
growth are we seeing, though, for the healthy category, just to be clear?
The percentage growth is around 6, 7, depends on what you have, health bars and so on.
Okay.
But that's about the growth.
And as a seller, I suppose, of the brands that flow through your stores, what are you noticing in your aisles in terms of what category of snack products sell well?
Yeah, snack products. Now we give more space to our fresh assortments, fruit and veg, produce, meat, but also the organic products. So that's where we grow much faster than in center store. And the second thing is in center store, we also sell more organic food, double-digit growth, both in dollars and in volume. But also, and agree with Dirk, I mean, it's up to a customer to decide what they would like to eat. But I think we can help, if they would appreciate that, to find the right balance. So more and more technology is coming into place to help customers navigate on the calorie level or on healthier alternatives. And for example, in the Dutch market where we operate, we have an app where you can say, I bought this over time, which we can see based on your loyalty card. Do you want to know healthier proposals? And if the customer says yes, it's up to them to decide. Then we can give them good alternatives with lower sugar, lower sodium, lower fats. And I think it's that balance we can help with.
So as that proportion of natural and organic and healthy goods increase, does it make sense to reserve shelf space for Oreos and Ritz crackers? How would that change in the way you sort of organize your store placement?
Yeah, so it comes back to the balance. And if Oreo is a nicer cookie to eat and sells better than another cookie, then I would give my preference to Oreo. But it's in the end to the customers to decide how they would like to organize their diet, and we can help making those choices. What you see is two things. In center store, it's got, of course, more under pressure on online. You can sell an Oreo cookie online, or razors or diapers is more difficult with lettuce and with fresh meat. So there will come more pressure on center store in all the supermarkets. And that's why we dedicate that space to other assortments with healthier options. If it's deli, if it's produce, it's fresh fish. And that's where we also grow much faster in fresh food at the moment.
Right. Okay. So you don't see that, shifting in terms of, the packaged foods, mass-produced, sugary snacks.
No, I think it's fair to say that the Americans also love their national brands and they love the variety. And we operate supermarkets which are much bigger in the US than they are in Europe. We operate supermarkets with 60,000 items. The Americans love their brands, love the variety, and in the end, they vote with their purchases, and we look on a constant base which products move and which products do not move.
So we, Dirk, we talked about the fickleness of the consumer. The taste shifting all the time, and you've come out with some innovations. I think things like wasabi Oreos, and what in the way of like innovation can we expect from your company in 2019?
Well, first of all, there is this evolution of tastes and going for more extreme taste, if I can say it like that, and the need to constantly have something new. It's about the experience. So while you and I might have eaten always the same Oreo, today's younger consumer wants to have a new experience as much as possible. So we need to keep up with that, and we constantly have to keep on doing that. I think that we also will see an evolution towards more premium type products, so you can expect us to innovate in that space. The millennials, they're much more about experience, and so super premium, different taste, that's really where it's
Can you give us a sort of glimpse of what's to come, like a specific product that you're working on?
Yeah, I mean, gifting is also a big part in that. So, for instance, one of the things that we do online, as an example, is that like I said, they want these special things. So we have this Oreo music box. It's called. It's a box that you buy, and when you put an Oreo cookie on it, it will play a song. If you take a bite out of the Oreo, it will play another song. And we put that online in China, and it's sold out in an hour or something like that. And that's the important part to realize about the consumer. It's about these special things, these different things. More and more, that is really what it's about. And as a company, we are really trying to go as fast as we possibly can. We just started a new venture called Snack Futures, and the whole objective of that group of people is to be finger on the pulse and what's next and what's coming and how can we be part of that. So, but the thing to think about it is the pace at which that innovation needs to take place is much faster than it used to be.
Understood. So, I mean, I want to talk a little bit about, Frans, the idea of sitting in the middle. So you've got, on the one hand, again, Amazon, which is everywhere. And then on the other end, you've got sort of, very well-resourced, Walmart, which is spending billions of dollars to keep their prices low. And then you've got like Lidl and Aldi's kind of nipping at your heels. So, it is a middle space that most people sort of see you as occupying. How do you distinguish yourself out of that category?
Just to some facts as a background. We grow our volumes and we grow our shares also in this middle field. And if you stay with the US, where we have number 1 and 2 positions on the East Coast, a lot of that market is still fragmented. Yes, Walmart and Amazon are formidable competitors, but there's a lot of space open in a market which is further consolidating. So I think in the end, consumers make that choice for strong brands with strong shares and with a strong philosophy on how they would like to run the business from a transparency point of view, from a sustainability point of view, from a food ingredients and a private label point of view. And I think looking at the US market, which is further going to consolidate, there's plenty of space. Okay. We have a healthy company, strong balance sheet, so I think we have optionality.
So you nicely ease me into my next question, because yes, the U.S. retail market is very fragmented, and you gave comments recently about the fact that there is going to be more consolidation in the retail space, and I think particularly in the U.S. You said you were in a solid enough position to take part of that. Tell us a little bit, what might that look like when you get ready to move?
Just one quick remark. When Lidl, and some of you might know Lidl, came to the US, it was, Lidl is coming, that will be a big shift in the marketplace. People forget that Walmart is by far the biggest discounter in the world. And we already compete successfully with them for decennia. So Lidl and Aldi are here now. I think it's good for the landscape. The market is big enough. Let's see what is the best proposition for customers. But in the East Coast of the US, there are a lot of independent companies, smaller companies, and a lot of companies for which it's difficult to make that investment now in technology, in IT, in supply chain, in sustainability, in private labels. And I think that market will further consolidate, and there will be options also to grow our share.
So in that independent space, and
there will be donors of market share there.
I mean, I'm just calling this up simply to make the point that there is a lot of M&A going on in the retail space, and it's cheap. Premiums are at record lows. So it's just an interesting sort of backdrop.
Sounds promising. Yeah.
You should do it. Yeah. So speaking of consolidation, the consumer space is one that has succumbed to a lot of market pressure. We've seen activists all over the place. Unilever obviously was targeted. Mondelez went after Hershey a couple of years ago. And then Campbell's Soup is going through its own private hell. I mean, tell us a little bit, either of you really, just, what does the market look like? What does the land space look like, in 5 years' time? Who survives?
I think that if you look at our sector, in this moment where the growth is coming from, it's about certain segments to be in, and not everything is the same in food. So if you're center of the store and largely North American focused, that's probably not a good place to be in. If you're in snacking and 75% of our business is outside of North America, you're in a much better place. I think if you're a pure player and focused on the segments that you really want to be in, and those are well-growing segments, you will do well. if you're a little bit all over the place, that's probably a very difficult place to be in. So I personally, I'm not sure that consolidation is the way to go from a growth perspective. And I believe that we are fine as we are in the snacking space. There's still plenty of opportunity around the world for us to grow. And that's really the direction that we're planning to take. What's gonna happen? I think, yes, those more North American center of the store focused companies that are having more difficulty getting growth, they will need to find other ways to create value. And then you can expect that consolidation and cost reduction could be a way to go. My opinion on that is, okay, once you've done that, what do you do then? Then now you have a bigger company that still has the same problem of not growing. So where do you go after that? And I think there will be a shift coming that growth in food is going to be recognized as the way to go.
Would it ever make sense for a big retailer, and I'm thinking like Amazon as opposed to Ahold Delhaize, and a brand producer like yourselves to get married?
Well, I like Frans, but I don't know I don't know. We don't know a lot about retail, and so it would not be a natural thought. That's why I wanted to say when we do online, we do it largely to people who know well how to do that. So I personally don't see easily. Maybe if you do super premium and a few own stores with a very high-end chocolate, I could see us do that. But for the rest, I don't see us immediately getting into retail. I don't know, Frans, what you know.
Rather about that retail buying you.
You want to be, for you it's different, I guess.
For us, a little bit different because we have those private labels we run, those own brands. In the US, we have 28% of our sales is own brands. In Holland and Belgium, for example, 50%. And we try to make the differentiation there also. And I think what you talked about, who is going to survive in these kind of markets which are very competitive. There are not only things about market share and these kind of things. There are also things about what consumers would trust in the future, how consumers would like to shop. Can you technology supported offer a more efficient journey in a store, more time efficient, digital supported? Are there inspirations in the store and new assortments in fresh and produce with, hey, wow, this is a different way to cook and this is nice to see. But also the whole transparency in the supply chain. We just had this romaine lettuce scare. And I think a lot of customers will be much more conscious about food safety, where is food coming from, how is it produced, and not only in a safe way, but also in a social compliance way. And I think that whole transparency will be also further supported by technology. And those companies who can invest in technology, who have a trusted brand for food safety, but also for example, data privacy, because that's another topic, of course. I think those customers will earn also the trust of consumers, and those companies will grow.
So I have time for probably one more question. I just wanted to, let's see if I can do this right now. Yes, so basically this chart shows 188 retailers in the Bloomberg World Retail Index and their performance over the last 5 years. And so in spite of, Europe's, advancements in retail technology and innovation, of which I think it's fair to say is far ahead of the US, investors aren't necessarily rewarding those companies for that. If you look at sort of, where Central Asia and North America, and it's not a dissimilar picture for global staples, so more in your world. I mean, mind you, it's not negative returns like you see in the retailers, but it's still sort of at the bottom of the pack. So the question really is, have investors lost faith in the European retail consumer sector?
No, I think it depends very much on which companies we talk about. I think companies which are not engaged in the online frame, that's difficult. Those who are not having invested enough in innovation, in fresh produce and giving options to customers. Those who do not have a good legacy in a sustainable company and doing the right things for associates, for customers, for producers and for vendors. Those who do not team up with first-class companies who also have a very strong base in sustainability, like Mondelez has as well. I think these kind of things are making you less competitive when you're not organized yourself properly. And customers will be more critical, and it's exactly the right thing. So I think the better companies will have a better life also in the future, who have invested in these kind of things in the past.
Dirk, do you have any?
Well, I will talk about our sector maybe. Like I said before, you cannot just look at the sector. You need to look what's in there. And like I said before, I think there's going to be differences between companies, and I do think there still is some solid growth to be had as an investor. I personally believe we're in that spot. There's other companies that are in that spot, and so you just need to be selective where you want to go, to my opinion.
Okay, I'm just going to do a really quick lightning round. Tell me in 10 seconds or less, what is the most pressing issue for the consumer and retail space in the next decade?
10 seconds, you said, huh? I think the overall, in the consumer space, I think it's transparency in the supply chain, and I think it's people trusting the industry that their data will be properly handled.
Okay. Dirk?
I totally agree with that. I think that's the number one. The second one is to keep up where the consumer is going. What does the consumer want? Because there's an incredible change taking place.
Okay.